Most of you on the call, especially if you're from North Dakota, are involved with U.S. Wheat Associates. You're very familiar with Mike Krueger. Mike started his career in the grain business with Cargill back in 1974. He has founded two grain marketing consulting companies and spent most of his career working with farmers and others associated with agriculture. He's a past member of the Minneapolis Grain Exchange Board of Directors and is a licensed commodity broker. And I know just personally, it's been great to work with Mike. He's done extensive consulting for U.S. Wheat Associates, so very familiar with the U.S. and international markets for corn, soybeans, and wheat. So looks like we have his presentation uploaded, so I'll turn it over to Mike.
Thank you, Jim, and thanks, Erica, for the invitation, and good to see everybody out there. It's too bad that we don't have better crop ratings and conditions and yield potential to talk about, but it is what it is. So I'm going to spend 20 minutes or so this morning kind of just giving you a broad-based overview of corn, soybeans, and wheat, and then Brian and Levi will take over after I'm finished and go into more detail about wheat and spring wheat and durum specifically. And I do expect to be around throughout the presentations and at the end, so if there are any questions for me later, I'd certainly be happy to take those questions. So in my title is Production Slips, Demand Stays Strong, and Supplies Tighten. Those of you who have been around these markets, as all of you have, or heard me talk the last 5, 6, 7 years, you know, the talk about weak markets was that back in the 2011, 12, 13 on corn and beans and 7 and 8 on wheat, when record all-time high prices were established, the focus and the talk by a lot of people was we had demand destruction. And in fact, we did not have demand destruction, as you'll see in a little bit. Demand continued to grow. It's just that record high prices brought more land, US and worldwide, into production. In addition to that, we had 7 or 8 years of awesome weather. Weather not quite as good a year ago, and this year, not just in the western half of the US and northern plains and in Canada, but other parts of the world have started to have some issues as well. And that's really what all of a sudden has brought the fact that supplies have been gradually tightening into more focus with higher prices. So what's driving these markets? Well, of course, the June 30th report, corn acres were not as big as expected. Soybean planted acres also not quite as big as expected. And then, as Erica adeptly pointed out, drought crushed the northern plains, small grains production, spring wheat, durum, and barley. And I think based on forecasts will eventually start to hurt corn and soybean production as well. I think what hasn't been as widespread talked about is what's going on in Canada. The drought has also crushed Canadian spring wheat, durum, and canola production there as well. Brazil's second crop, corn, which is 65 to 70% of their total corn production, was also hurt badly by drought. And this week, now we're starting to hear talk about hot, dry weather starting to threaten or at least reduce the yield potential for spring wheat in Russia and also for corn in the Ukraine. Western Europe has had a very, very good crop coming. In fact, one of the analytical groups out of Western Europe actually raised the EU wheat production forecast this morning. The problem is, if you've been watching the news at all lately, they've had just incredibly heavy rains and flooding, particularly in Germany and some of the areas that are typically known for good quality, higher protein wheat. So with that, I'm gonna talk fast because time is limited and there's a lot of things that that we need to kind of cover. I'm gonna talk supply and demand, and I use what happens or where will ending stocks be in terms of days supply. So what you see is US soybean ending stocks in terms of days supply. So in theory, if on the last day of August, we never harvested another acre of soybeans again in the United States, we would be down to roughly 10 acres consumption left. So we're going to be at bin bottoms. And I think it's obvious that we already have maybe seen a few soybean imports into the southeastern part of the US where there's big poultry and hog markets. And it's just cheaper today to bring some beans into that market than it is to ship them from the Midwest and the Western Corn Belt, plus the fact that beans aren't there. So we're going to be right down to nearly where we were back in 2013. That's the year 12 and 13 when soybean prices set all-time highs. This very last dot here, 21, is where the USDA said a week or so ago that we would be at the end of the next marketing year, at the end of August 2022. And that estimate is based on having the second highest soybean yield in history. So just kind of keep that in the back of your mind. Super tight, big demand the last couple of years, slightly smaller crop production. And we have taken soybean ending stocks in this country down to, as I said, almost bin bottom levels. If we look at the world situation, doesn't look quite as dire. Remember, Brazil has had record crops, I think, almost every year, and the USDA and others are forecasting now that the Brazilians will plant 2 or 3% more soybean acres, and of course, everybody these days wants to put record yields against these crops even long before they're planted. But nonetheless, we are starting to approach levels. Here's where we were back in the same time, 2012, 13, 80 days of supplies left in the world. Now we're just 10 days more. And again, keep in mind, that's based on forecasts for the second biggest soybean yield in the US history. And it's based on a big South American soybean crop next year. Consumption and production of soybeans, and I always like to point this out, the blue line is consumption. The red line is production. Just to point out, even back in 2012 and 13, you know, we did not kill consumption. That's the blue line. Back here, we had two problems. In 2 years ago, the consumption flattened out because that was the year of the big problems in China with the African swine fever, and also smaller crops, particularly in Argentina. So just the notion that high prices kills demand really hasn't been the case. And if you look at this soybean, even going back 10 years or 12 years, I mean, the increase in consumption and production of soybeans has been quite phenomenal. And of course, China's been the key to that. Here's the year where they imported about 85 million tons of soybeans, African swine fever or swine flu, whatever they were calling it back at the time. And remember also, there was all this chatter in China that they were going to find every single alternative source of protein that they could, and on and on and on. Well, here we are, right back setting new records in terms of Chinese soybean imports. And the USDA has now pushed that up to 105 million tons for the coming marketing year. Key points about soybeans. Final U.S. soybean yield. Understand that the Eastern Corn Belt and a good chunk of the Western Corn Belt has had really good moisture and not super high temperatures. Also remember that we don't need to have severe problems in the soybean crop to make a difference in supply and demand. Just a 1 or 2 bushel decline in the yield per acre below the estimates the USDA has been using the last couple of months drops ending supplies to almost zero. Also keep in mind that where it is very dry, the North Dakota, South Dakota, Western Minnesota in particular, those 3 states account for roughly 21% of the US soybean acreage. So we are not a small piece to the national puzzle anymore. Also remember, of course, that the soybeans yield really is made during the month of August. So we're still carrying high soybean yield estimates, but if this weather pattern continues to hold, that could change quickly. The canola crop in Canada is quickly becoming a disaster. People we talk to now think it could be off 30% from early expectations. That has driven canola futures to all-time record highs. It's helped boost soybean oil prices as well. China's demand for soybeans we think will stay strong. That still can be a puzzle. And how does China replace Canadian canola imports that simply aren't going to be there this year? Many people think that will boost their imports of soybeans. Just a quick look at November soybean futures. This is from a year, the last 12 months, and this was taken, I think, Thursday night. Soybeans were strong overnight. I think they're just slightly lower today. So unquestionably, the soybean market still probably could be the primary driver, although wheat's gaining quickly. Here's November canola, Winnipeg canola futures. That's back when they exceeded 950 bucks a metric ton and dropped off just a freckle over the last session and a half of trading. If we look at corn ending stocks, similar days supply. So this year at the end of August, if we didn't harvest any more corn, we'd be down to roughly 25 days. Very, very similar to where we were back in 2012, 2013, when we set record high prices in corn. And I'm not suggesting that that's where we're going with corn prices. I'm just saying that we're at those same levels, very, very tight. The USDA, when we look a year from now, is projecting more acres and a big yield and a slight increase in acres for 2022. Now remember, ending stocks, I mean, remember that, again, this is based on an all-time record high U.S. corn yield estimate. Many people think the corn export forecast is too small because of the Brazilian problem. We also think the production forecast might be too big. And similar to soybeans, Minnesota, North Dakota, South Dakota account for 20 to 21% of the planted acres of corn. So weather is important, and how these crops finish, very important. World corn, similar. I think two things to point out in world corn supply and demand. This is the current marketing year. This is the next year. The first is that 67% of the world's ending supplies of corn are in China, and China has become a pretty significant corn importer. The USDA has failed to lower China's reserve or ending stocks of corn, despite all the evidence you can dig up that those 200 million metric tons of surplus corn in China really aren't there. You remember they've been auctioning off supplies for a year or two. Corn has moved to record high prices in China, and they have imported record amounts of corn. So if you take China supplies out of the world ending stock situation, we get down to 35, 40 days, which is essentially, again, bin bottoms. Brazil's corn production, here's where we are. The current year just ending. Down, the USDA was at, I think, 93.5 million metric tons for their total corn production. A few months ago, they were at 102 million tons. Many people think it's down around 85 million metric tons or so. And of course, as I mentioned earlier, everybody likes to, when we start looking at a year from now, project record acreage, record yield. So that's the Brazilian forecast for production for a year from now. Here's where they stand in terms of production for the current year that's about to end. World corn production, consumption, and again, the blue lines, usage, the red lines are production. So keep in mind that for the last 3 or 4 years in a row, the world has worked off those big surpluses. They've reduced ending supplies. And again, I think maybe this production estimate is a little too big. I'm not sure the U.S. can have a record corn yield this year. And of course, we still think Brazil, the USDA's Brazilian production estimate's a bit too high. China's corn imports, just to kind of go back to 91, here's what's happened. Last year, 26 million tons, the bulk of that from the US. USDA is still estimating 26 million tons for the coming year. And I think the US will maintain that big percentage of nearly all of it because Brazil is essentially going to be out of the corn export market. And if the Ukraine's weather continues to stay hot and dry, that's going to reduce their exportability as well for corn. So just remember, again, we don't need a 2012 US corn yield where we took yields down to 123 bushels an acre. The current estimate is 179.5 bushels an acre. Just a 3 to 5% drop in the US corn yield makes this thing really get tight. I talked about Brazil and how the USDA is overestimating, we think, their crop. Brazil's corn crop, 20 to 23 million metric tons below early forecast. That's almost 900 million bushels. That means it's going to severely curtail their ability to export corn. I talked about the U.S. export forecast, too small, late season dryness in the Ukraine. China's appetite, we think, will stay in that neighborhood. Here's December corn futures, peaked back in early May, then collapsed, and now we're trading in the December contract right around 558, 560. It was firm overnight. Last I looked, it was unchanged or maybe just a freckle lower. Okay, a brief look at wheat, and then we'll turn the program over to people who will talk to you in more detail, Brian and Levi, about wheat and specifically spring wheat and durum. U.S. wheat ending supplies have been gradually trending lower over the last 6 or 7 years, and that's the case again this year, down to just over 100 days supply. We think that their feed use is probably understated still. We also think that their import forecast, they raised the import forecast to 145 million bushels last month. Remember, almost all of that comes from Canada, and now Canada is experiencing a really steep decline in production as well. And also, I like to point out to people that, you know, of that 105 days or 650 to 700 million bushels of U.S. ending stocks of durum, that's made up of 5 totally different classes of wheat: soft red winter, hard red spring, durum, and white. So if you divide that total by 5, as you'll see in a bit, all of a sudden, on a class by class basis, with the exception of hard red winter wheat, things are tightening up pretty quickly. World wheat and day supply down, but not quite to the degree that the US supplies are. I do like to point out that, similar to corn, 50% of this 135 days left of wheat in the world at the end of the marketing year, a full 50% of that resides in China. If you take that out of the equation, it's a vastly different looking picture in terms of world surpluses. And I think that will start to really make a difference this year, when all of a sudden we have a significant problem in the US with wheat production, and a significant problem in Canada with wheat production, a little smaller crop in Russia and the Ukraine, perhaps some quality problems in Europe. All of a sudden, the major exporters aren't carrying nearly as big a surpluses as they did just a few years ago. World wheat production and consumption, again, the blue lines, consumption, the vertical or the red lines are production. And again, I think this production number is a little bit too big. They're going to have to trim Canada, which they did not do at all last month, and they might have to make some other slight reductions. But rarely have we seen this blue line or consumption falter, regardless of price. China wheat imports back in the early 90s, 16 million tons was the most they'd ever done. The last couple of years have been in that 8 to 10 million metric ton import number. Remember last Friday, I think it was, the USDA announced a very small purchase of 134,000 metric tons of US soft red winter wheat by China. There was some chatter around the market after that announcement that China really would have liked, and maybe still would like, to buy upwards of 1 million tons of US soft red winter wheat, but that hasn't happened yet. And as far as I know, there were no announcements this morning. Here's the Minneapolis September wheat futures, set new highs virtually every day last week. They were 16, 17, 18 higher overnight, backed off this morning. It's going to be a volatile market, but there's certainly nothing going on that we see out there in terms of weather or information from producers to suggest that this crop is going to get any bigger. In fact, really everything points to, as Erica pointed out, the abandonment is going to be much bigger than the USDA is talking about now. So unfortunately, not good for us up in this part of the world. I'm just going to highlight a few things quickly, and then we'll move on. One, as I mentioned, Canada's spring wheat crop is quickly turning into a disaster like ours. The USDA only lowered their crop from 32 million ton estimate in June to 31.5 million ton estimate. I know I'm talking million tons. Lots of people in Canada have told me over the weekend and this morning that they think Canada's total wheat production could be as small as 23 to 24 million tons. If that's the case, Canada's going to run out of spring wheat, and that's going to limit their ability to export spring wheat any place, and particularly that 3 or 4 million tons that the USDA has them slated to come to the US. We talked about spring wheat, durum, and white wheat crops out in the PNW had similar problems with drought, spring wheat and white wheat out in the eastern, central, and eastern Oregon and Washington. U.S. hard red winter wheat crop is big, some quality issues, and of course, lower protein because of the very wet growing season. Currently, dryness starting to impact spring wheat production in Russia and Kazakhstan. They're not exporters of spring wheat, but remember, if their domestic supplies in total shrink, it does impact their ability to export as much as they have over the last several years. EU and Australia crops. EU, as I mentioned, big crop, but now it needs to stop raining to hold quality together. Australia really is still kind of in their dormant phase, although they continue to get some decent moisture both on the east and west side, so they're in good shape. Remember, the critical time for Australian wheat production really is September and October. It's kind of like April, May here for our winter wheat. That's when those crops, they don't really go dormant, but they just stop growing. So that's when moisture is extremely important. So I think we managed to stay within my allotted time slot, but I wanted to give you just a really quick overall view of what's going on in the major markets of wheat, corn, and soybeans.
Okay, well, thanks, Mike. And I see we have one question in the chat box. I'll try to read through that quick. Have wheat prices hit a bottom? Question mark. Do you expect flat to firm prices over the next 30 to 60 days? How about for hardwood winter and softwood winter, even with reasonably good production?
So, boy, we've run so fast on spring wheat that, yeah, we've certainly bottomed there. I think the question is, how high can spring wheat go? And that's I don't know how to answer that question. I'm hearing people, of course, now talk about $10 September or December Minneapolis wheat futures, but that will depend, I think, in large part on how these crops in other parts of the world fare and just how serious the situation gets in Canada. Hardwood winter wheat is a class of wheat that we have a lot of. As I mentioned, I think that that's going to, a lot more of that's going to go into feed channels. And remember now that since we have a very small spring wheat crop, and there probably are going to be, well, there are going to be issues with mega high protein and probably light test weight. It's going to change some blending patterns and use more hardwood winter wheat. So I think we're going to work off more of that hardwood winter wheat surplus than people thought we would 30 or 60 days ago. And yes, I think prices are going to stay stable on wheat or trend a little bit higher over the next 30 to 60 days. And it's possible that we see wheat kind of take over as the price leader for a little bit, which is the first time that's happened in many years. And if you look at the gap between spring wheat and hardwood winter wheat, which has gotten now, you know, almost $3 a bushel, I think that gap has to come together. And I think that happens with Kansas City gradually starting to gain a little bit on Minneapolis.
All right, Mike, there was another question sent to me. It says, it appears we're mostly in a weather-driven market for all commodities, but is there anything you see on the horizon or that, you know, we might not be hearing about as much that could impact markets?
Well, I mean, the big key always is what goes on with China and what they do with our, particularly with soybean exports first, corn exports second. I have thought that China would be a bigger buyer of U.S. wheat over the past 12 months, and I think we'll still see that, you know, come to fruition going forward. So certainly what China does is still the most important ingredient in these markets. Secondly, will be as soon as we get to August in this country, when we have a much better idea of corn and soybean production and yield perspectives, then you know, all of a sudden we flip to South America. I think these markets are especially corn and soybeans, almost a neutral for a while despite weather, because people want to see evidence that we're going to attract more corn export business because of the problems in Brazil, and that China is going to continue to buy soybeans as well.
Okay, and there was another question here that just came in. Could we have a squeeze in the spring wheat market looking towards next spring like we saw in 2008?
Yeah, I think it's entirely probable that we will have some kind of a squeeze in the spring wheat markets. You know, I think just as kind of a cautionary note, that the composition of these futures markets is vastly different than it was even 10 years ago. Remember, we've expanded position limits, we've expanded daily trading limits. We have catered even more than 10 years ago to the large money, the large speculative trading funds. There have been some changes made in the way old-fashioned delivery markets worked, and that's what really would cause these squeezes. You know, you could buy Minneapolis spring wheat in the May contract and just hold on to it and force somebody to either run the market up to an exorbitantly high level in the futures or give you the actual spring wheat. I think some of those old-fashioned market adjusting mechanisms don't work as well as they used to, but yes, the spring wheat situation worldwide is going to be extremely tight.